Is Nvidia buying another AI chip company? Not exactly. And that's what makes this deal so interesting. Nvidia licensed Groq's inference technology. It also hired key members of Groq's technical team. But Groq itself remains independent. So, why would Nvidia commit billions to this technology? Let's break it down. First, what does Groq actually do? AI has two major stages. First comes training. That's when AI models learn from huge amounts of data. Then comes inference. That's when trained models generate answers. And inference is becoming increasingly important. Think about ChatGPT style applications. Every question creates tokens. AI agents can create even more tokens. As AI usage grows, companies need faster inference. That's where Groq comes in. Groq developed technology designed for very fast AI inference. Its technology is built around its language processing unit or LPU. Nvidia already dominates AI computing. So why does it need another architecture? Because AI workloads are changing. Nvidia's latest move gives us a major clue. On August 24, Nvidia said its Groq 3 LPX system had entered full production. It's designed to work alongside Nvidia's Vera Rubin platform. The goal is simple: generate AI responses faster, especially for AI agents and interactive applications. Nvidia says Groq 3 LPX delivered about 3400 output tokens per second. That was in an artificial analysis benchmark. The test used the Gemma 4 31B model. It also used a 100,000 token context. Nvidia says the result was about 4 times faster than the nearest alternative platform. But remember, that's for that specific test. It's also a company reported benchmark. It should not be treated as a guarantee of real world performance. Now comes the bigger question: why license Groq's technology? Why not build everything internally? One possible reason is speed. AI infrastructure is developing extremely quickly. Nvidia already has GPUs, CPUs, networking, and software. Groq adds specialized inference technology that could give Nvidia another tool for different AI workloads. In simple terms, Nvidia isn't replacing its GPU with Groq. It's combining different technologies. Each can target different parts of the AI workload. That distinction matters. There is another important clue. The first announced cloud deployment is with Nebius. Nvidia says Nebius plans to use Groq 3 LPX alongside Vera Rubin systems. The systems are expected to become operational later this year. So investors now have something concrete to watch. Not just the deal, but actual deployments, actual customers, and eventually commercial demand. Now let's look at the money. Nvidia's SEC filing says the December 2025 transaction involved $13 billion paid at closing. Another $4 billion was payable within 1 year. That brings the SEC disclosed consideration to about $17 billion. Nvidia also said it did not purchase Groq's equity. It did not purchase Groq's customer contracts or existing products. So this is not a traditional company acquisition. That's a very important detail for investors. So why are we talking about billions? Because this is a major technology licensing and talent transaction. Nvidia is paying substantial consideration for access to Groq's inference technology and key talent. The structure is important. Nvidia gets access, Groq remains independent, and the agreement is non-exclusive. That means Nvidia can use the licensed technology, but Groq can potentially license its technology to other companies too. So this is not simply about Nvidia taking over Groq. It's about adding another technology layer to Nvidia's AI ecosystem. Now consider Nvidia's financial scale. In its latest reported quarter, Nvidia generated $81.6 billion in revenue. Data center revenue reached $75.2 billion. That's up 92% year over year. So Nvidia is making this move from a business operating at enormous scale. But that does not automatically make the deal successful. That's a key point. So what should investors watch next? First, deployment. Will cloud providers and enterprises actually adopt the technology? Second, performance. Can Groq technology deliver meaningful advantages in real-world workloads? Third, economics. Does faster inference also improve cost and efficiency? And fourth, integration. Can Nvidia combine Groq technology effectively with Vera Rubin? Those questions matter more than the headline dollar figure. There is also an interesting development at Groq itself. Groq remains independent. In June, it raised $650 million to expand its inference cloud. Then in August, it announced another $350 million Series A that valued the company at about $3.5 billion. Groq says it now operates across 13 data centers. It also says it serves more than 6 million developers. So, Nvidia's relationship with Groq isn't simply about absorbing a company, it's also about expanding access to inference technology. So, why is Nvidia spending billions on Groq? Potentially because inference could become the next major AI infrastructure battleground. Training created the first massive AI hardware wave. Now, AI applications are creating enormous inference demand. Nvidia already has the hardware, networking, and software ecosystem. Groq adds another approach to inference, but whether this transaction delivers meaningful long-term value will depend on adoption, performance, economics, and execution. Those are the things worth watching, and that's what we will continue tracking here. If you found this breakdown useful, like the video, share it with other investors, and subscribe to the channel. We break down major global stock market and technology developments in simple language. Thanks for watching.